Welcome to Profiletraders. This is Reza and you're listening to my market analysis for September the 23rd. If you go back and listen to the video I issued yesterday, I told you that the big parameters containing the market on the downside was 912, and when we closed yesterday at 1931, I specifically mentioned that if we do drop, the drop should go towards 1912, at which point it was going to encounter significant support. Well, last night low was at 1911, and then I told you for anything on the bullish side to happen, we would need to cross and close above 1940, and we look at the high of last night, it was 1942. So both of these two big numbers were given to you last night, not on pre-recorded crappy video that the crooks play out there and then brag about their knowledge of the market, knowing already what happened, but live and ahead of time. So now in the big picture, the 1940 and the 1912 are the two big ranges, or the two big numbers that we have to look for to break. And once they do break, for example, it tried to break 1940 overnight, but this wasn't what you call a break. A break, when it happens, it should fly away from that level and then close outside that level. Just because you stick your head out of a number and come back again, trade through it, that's not a break. So we need to exit decisively out of 1940 in order to go first to 1945. And once we cross through 1945, all this area on the profile where you have the single and the double letters should then be traded through, and there is a POC up there at 1959. On the downside, in order to go back again to 1912, we have to clearly break 1920. If we do break 1920, the odds of going back for another retest of 1912 becomes exponential. Past 1912, we have 1900, and once we break the psychological 1900 level, we need to monitor the situation to see how bad that break of 1900 could be or not be. As of right now, the market condition still remains exactly the same as I explained yesterday, which are extremely violent back and forth. You have to be extraordinarily accurate knowing what level to pick, because if you pick the slightest wrong level, no matter how wide your stops are, you're gonna get just destroyed. So be very, very careful. This is not uncommon. It's a month of September, and September, October are known to be kind of crazy. As for crude, also was very, very, very vicious. Yesterday I told you that there was this POC up there that was possible upside target at 47.05. Once the reserve numbers were released, we did push up high enough to take that POC away. My sell zone was 47.30 to 47.50, which missed by a very little. And then we got a reversal, came down, and the moment we broke the low that we had from the opening of the session with A period, which was below 46.20, all hell broke loose. And now we came back and closed extremely, extremely bearish with a massive amount of single letters behind us, which were never ever challenged during the session, indicating that this was some serious selling that came in. for anything bullish to happen, we have to cross back above 45.20. We do that, then we should go towards 45.75, and we clear 75, we should go then to 46.20. On the downside, I'm going to put a daily chart so that you see it a little bit better. We are at life or death for crude here. If we do break and exit out of the bottom of this daily consolidation below 44.15, so we're gonna take that level down, which was my support for today, which contained price exactly to the tick. Now we're gonna put a more serious line here at 44.14 to 44. Once this breaks, then as I showed you on the daily chart, we are going to be on a breakdown from a multiple day consolidation, and if this happens, we could very easily go retrace all the way down to $40. And if we do not do that, the 44.14, 44 even holds, then unfortunately we are going to be trading within this trading range that goes on from roughly 44 to 48. I know it's a wide range, I know it's crazy, but that's how the markets are lately. They're all a little bit on the schizophrenic side of things. Now let's look at quickly gold. Again, not really much. Yesterday I told you there was absolutely zero indication of forced liquidation or panic selling or anything like that. And today, as it bounced, it was very much contained. There is really not much going on here. I think a lot of people have lost interest trading gold because among all the instruments is the one that never responds to bullish case scenario for it, and the slightest negative they hammer it. Of course, in my personal opinion, this is all without any doubt nor question in my mind, Federal Reserve spending God knows how much of the Federal Reserve funds to keep gold hammered, because this is the one thing that they absolutely detest going up, and they would do all they can to not encourage people to take their money out of the bank accounts so that the thieves of this world, the bankers, can access to your deposits in order to spend it, gamble it, lend it. But when the money goes under gold and it's in your safe, that's it, it's out of the system, and this is not something Federal Reserve likes. So we are still within a trading range. Exiting to the downside requires to break 11.15. Exiting to the upside requires to break 11.42. So we shall see which side of this trading range one of these days, with a miracle, it will decide to break up or to break down. As of right now, since it's a middle of the range, it could as easily go up to the top part of the range or come down to the bottom of the range. No way to tell. That's the rule. When you are in the middle of a trading range, it's the absolute worst location to be, because the odds are very much so 50-50. This was Reza with Profiletraders. Thank you for listening. If you are looking to learn market profile, you can get all my courses and have a 1-year trading room membership where you see me trade live every day, analyze 4 markets, call the trades for $5.50, and that's 30 days money back guarantee.